Welcome, deep divers, to a truly mind-bending journey today. We're going from, well, the very sterile environments of hospitals, all the way to the vibrant, sometimes volatile world of decentralized finance.
It's quite the jump.
It really is. We're unpacking a headline that's so audacious, so unexpected, it almost feels like a plot twist from some kind of sci-fi thriller. Imagine this, if you will. A company whose name you normally associate with, get this, syringes and Sharps disposal systems.
There you go.
The essential no-frill stuff in medical facilities.
Standard medical equipment, basically.
Exactly.
Yeah.
Now, picture that same company suddenly making massive waves in the high-stakes crypto arena.
It definitely catches your attention.
Right. So that's what we're diving deep into. The story of Sharps Technology, a traditional medical device company making a monumental, and I mean monumental, $400 million pivot to establish a Solana, or SOL, treasury. This move, it didn't just turn heads. It sent genuine shockwaves through, well, both traditional financial markets and the crypto community. The sheer surprise factor.
Yep.
A company from such a grounded, physical, highly regulated industry, just jumping headfirst into a cutting-edge digital asset like Solana, that's what grabbed our attention, and we suspect yours too.
And it's really important to stress this isn't just some quirky news item, flash in the pan.
Right.
This dramatic shift by Sharps Technology, it actually serves as a pretty profound indicator, I think. It signals a much broader and frankly accelerating evolution happening in the corporate landscape. We're seeing established traditional businesses starting to look well beyond conventional financial instruments.
Yeah.
They're actively exploring the strategic potential, the inherent value of digital assets like Solana. This whole scenario highlights a fundamental reevaluation of corporate capital management. It really prompts us to reconsider what exactly a company's treasury can hold and maybe should hold, in the 21st century.
Absolutely. So our central theme for this deep dive is Sharps Technology's incredible, almost transformative journey. From medical device maker to essentially becoming a significant bet on the future of Solana. We're going to pull back the curtain, explore all the intricate specifics, the dramatic market reaction to the news, the underlying strategic rationale driving such a, audacious move, the unique attributes of the Solana ecosystem that made it particularly appealing, and crucially, what this all signifies for other companies maybe looking at crypto beyond just, mere speculation.
If you frame this in the grander scheme of things, modern business strategy, this case study could very well become a kind of blueprint, a masterclass, perhaps, in modern corporate strategy.
A masterclass, I like that.
It really illustrates how firms, even those deeply rooted in traditional industries, operating within established regulations, are actively seeking innovative solutions for managing their capital. Their aim seems clear: achieve both enhanced growth and crucial diversification in what's becoming an increasingly digital, interconnected global economy. This really challenges our sort of preconceived notions of where value can be found, how it can be managed efficiently, and ultimately how it contributes to the long-term success of a public company. It's not just about a medical company buying crypto. It feels like a fundamental shift in how corporations are thinking about their balance sheets.
Okay, let's unpack this. It's a fascinating narrative.
Yeah.
Let's start by getting a clearer picture of Sharps Technology itself. Before this crypto bombshell landed, if you'd mentioned Sharps Technology in, say, a boardroom or a medical conference, people would immediately think of their core business. Safety syringes, innovative needle disposal systems, that kind of thing.
Critical stuff, but not exactly glamorous.
Definitely not glamorous. Critical, but let's be honest, decidedly unglamorous medical necessities. They're a company fundamentally dedicated to improving healthcare safety through devices, operating in a sector known for, meticulous regulation, long development cycles.
Very traditional business models, generally.
Exactly. Traditional business models.
And that stark contrast is really key here, isn't it? Between their longstanding traditional business, tangible manufacturing, distribution, physical devices, and this bold, highly digital, forward-thinking financial strategy.
It's jarring.
It really is central to the story's intrigue. It's almost as if two entirely different worlds, separated by decades of conventional thinking, have suddenly just collided. You've got the methodical, rigorously regulated, often conservative world of medical devices on one side, and on the other, the fast-paced, often volatile, constantly evolving realm of blockchain and DeFi. That juxtaposition alone, it should make you pause and just consider the sheer scale of this strategic leap.
It absolutely makes you pause. Try to visualize it, Picture the typical boardroom discussions at Sharps just a few years back.
Right.
You'd likely hear about manufacturing efficiencies for new syringe designs, optimizing supply chains for medical-grade plastics, navigating complex FDA regulations, or maybe strategizing market penetration for disposal units in hospitals.
Tangible, physical world concerns.
Totally. Physical world concerns. Now, fast forward to today and imagine that shift. Suddenly, the conversation pivots entirely. Discussions about Solana's staking yields, network TPS rates, the intricacies of decentralized treasuries.
Or a 15% discount on a huge SOL purchase.
Exactly, that discount too. It's a fascinating, almost surreal, certainly unprecedented pivot for a company like this. It shows an incredibly bold leap of faith, a fundamental reorientation of their financial strategy. So with such a radical shift, how did the market react? What was the immediate verdict? Well, it was nothing short of dramatic. Explosive, even.
Yeah, that's a good word for it.
Sharps Technology's shares absolutely skyrocketed when the news broke. On that day, their stock saw an intraday surge of nearly 96%.
Almost doubled.
Almost doubled. Shares rallied from around $7.40 up to an astonishing $14.53 before settling back a bit, closing near $12.01. For a company operating outside the usual high-growth tech or crypto sectors, nearly doubling your stock price in one day, that's extraordinary, almost unheard of.
Completely unheard of.
It's a clear signal the market took notice and reacted with, well, intense enthusiasm.
And that sharp, almost instantaneous rally is incredibly significant. It really warrants a deeper look at investor sentiment, I think. For a company with such a traditional profile outside the usual tech or crypto hype machine, to see that kind of rapid, massive increase, it speaks volumes about the current appetite for traditional companies integrating substantial crypto exposure. It immediately raises that really important, nuanced question for you as an investor. Is this genuine excitement for strategic innovation, for intelligently integrating a novel, high-growth asset into a treasury?
Yeah.
Or is it more of a speculative frenzy, fueled by the novelty, the perceived, exponential upside of big crypto exposure? The market's clearly trying to price in both possibilities.
Right. It's hard to disentangle.
It is, and historically, think about it. A positive announcement from a traditional business, strong earnings, a small acquisition, a product launch might give you a few percentage points. Maybe.
If you're lucky, yeah.
A really exceptional event might push it into double digits. But to see a company's valuation nearly double in a single day, driven primarily by a treasury strategy involving a digital asset,
Wow.
it just underscores the utterly unique, powerful impact that these substantial crypto plays are having on market valuations today. It's not just a slight uptick, it suggests a significant chunk of the investor base is actively seeking these kinds of opportunities.
Seeking companies that are showing foresight.
Exactly. Leveraging these new digital paradigms for capital management, for growth, it's a profound shift in what drives market excitement and valuation right now.
Okay, so the market reaction was undeniably huge, enthusiastic. Now let's peel back another layer and get into the critical how. How exactly is Sharps pulling off this strategic, multi-million-dollar crypto move?
Right, the mechanics of it.
The core mechanism, the financial vehicle they're using for this pivot, is a $400 million private investment in public equity. Usually hear it called a PIPE.
PIPE deal.
This PIPE is the chosen vehicle through which Sharps explicitly plans to acquire and strategically build out its Solana, its SOL treasury.
And understanding what a PIPE is and maybe why they chose it is pretty crucial here.
Yeah, let's break that down.
So in simple terms, a PIPE transaction is where institutional investors, could be hedge funds, private equity, maybe even wealthy individuals, buy shares directly from a publicly traded company.
Okay.
Usually, these shares are bought at a discount to whatever the current market price is. Companies often go this route when they need to raise a lot of capital quickly for something specific.
Like a big growth project?
Exactly. Or strategic acquisitions, or, in this rather unusual case, funding a massive treasury allocation in a high-growth digital asset. It gives them a structured way to bring in large, often sophisticated capital without the extensive regulatory hurdles or the time involved in a traditional public offering.
Which raises that key question for us, right? Why a PIPE for this kind of move instead of, say, a standard secondary public offering or maybe taking on debt?
Good question.
Well, a PIPE seems to offer several advantages in this scenario. First, speed. It can be significantly faster to execute. And when you're dealing with volatile assets like crypto,
Timing is everything.
timing is everything. Second, it gives them direct access to specific institutional capital that might be particularly interested in this exact strategy. Investors who want crypto exposure through traditional stocks.
Targeted investors.
Right. And third, it lets the company tailor the terms more directly with a select group rather than a broad market offering. But there are trade-offs, right? A PIPE usually means issuing new shares.
Which means dilution.
Exactly. It can dilute the ownership stake of existing shareholders, even if the overall market reaction, like we saw here, was initially positive. It's a strategic balancing act: speed, capital access versus potential dilution. Okay, so that's the funding mechanism. Now let's zero in on the actual initial buy-in for Solana. The arrangement, according to the sources, includes a substantial $50 million spot purchase of SOL.
A big first step.
A very big first step. And here's where it gets really interesting, giving us a clue about the strategic depth here. This initial $50 million purchase is being made at a significant 15% discount to the market price.
Wow, 15% off.
15% off. This isn't just some random market buy. This advantageous deal is facilitated directly through a letter of intent, an LOI, with the Solana Foundation itself.
Okay, that 15% discount on such a big purchase is absolutely fascinating. It really warrants a closer look.
Yeah.
It's not a minor concession, it's a powerful strategic signal. Why would the Solana Foundation offer that kind of discount?
Good question. What's in it for them?
It unambiguously signals their very strong interest in fostering legitimate institutional adoption. They're actively encouraging traditional, public companies to integrate Solana into their core corporate strategies. For Sharps, obviously, that immediate 15% discount injects significant value into their treasury right from the start. It gives them a head start, an inherent advantage.
Like free money, almost.
Well, not quite free, but it's a clear, tangible incentive demonstrating the Solana Foundation's proactive commitment to expanding the ecosystem's reach and legitimizing Solana within traditional corporate finance. It's more than just a transaction. It feels like a strategic partnership signal.
Yeah, that makes sense.
And just to quickly clarify, spot purchase for our audience who are likely familiar, but just in case, it simply means buying the asset immediately at its current market price. Or, in this pretty unique case,
At that pre-negotiated 15% discount off the current price.
exactly. And the direct involvement, the proactive role of the Solana Foundation in facilitating this kind of direct discounted deal is also really telling.
How so?
It implies a significant level of maturity in Solana's ecosystem governance, a sophisticated, proactive approach to institutional engagement. They're actively trying to bridge that often wide gap between the dynamic world of Web3 and the more conservative structures of traditional corporate finance.
They're meeting them halfway, essentially.
Precisely. This deal suggests Solana isn't just seen internally as a speculative asset. It's an ecosystem actively courting serious, long-term corporate players.
And it seems Sharps isn't just relying on the asset itself. They're also bringing in serious brain power, right? Focusing on Solana native leadership.
That's another crucial piece. They've appointed Alice Zhang, who co-founded Jambo, a pretty prominent Web3 startup, as their new chief investment officer, the CIO.
Okay.
And James Zhang, another figure with deep crypto connections, is coming on as a strategic advisor.
So this raises another strategic question. Why is it so critical to bring in people with deep, specific experience in the Solana ecosystem, not just a general crypto expert or a traditional finance CIO?
That's a really key point. A Solana native CIO brings a unique and frankly invaluable skill set. They possess an intimate, granular understanding of that specific network's technical nuances, its developer community, its diverse range of dApps.
And crucially, its specific risks and opportunities.
Exactly. This expertise goes way beyond just understanding general blockchain principles. It means having hands-on familiarity with Solana's unique architecture, proof of history, its staking mechanisms, its key liquidity providers, the dynamics of its DXs, its evolving regulatory landscape.
Specialized knowledge.
Highly specialized and absolutely vital for effectively managing a corporate crypto treasury of this scale. It demands a very different skill set from traditional finance roles. You need a profound understanding of smart contract security, DeFi protocol intricacies, the potential for rapid tech shifts within that ecosystem, navigating its distinct community and governance.
Makes sense.
And this move by Sharps also connects powerfully to that broader trend we're seeing everywhere, the migration of specialized talent from TradFi and tech into Web3 and blockchain. Companies are increasingly recognizing they need specific, hands-on experience and deep contextual understanding to succeed in these digital frontiers. It's a clear sign the space is maturing, demanding sophisticated, specialized leadership.
Okay, so this brings us right to the fundamental question. Why Solana? Out of all the options, what specifically about SOL made it the chosen one for a medical device company's massive treasury pivot? Not Bitcoin, not Ethereum. Why Solana?
Yeah, the why Solana question is central. And it turns out Solana has this compelling set of metrics and characteristics that, when you put them together, position its treasury as a kind of high-growth, high-yield proxy,
Right.
which is an incredibly attractive proposition for modern corporate capital management.
So what's really fascinating and maybe often overlooked in general crypto talk is how Solana's unique technical and economic features translate directly into tangible benefits for a corporate treasury, right?
Exactly. Let's dive into some of these key metrics and connect each one back to the strategic advantage for a company like Sharps.
Let's do it.
Okay, first up, 7% staking yields. Now, for those maybe less familiar, staking lets holders earn passive income by essentially locking up or delegating their SOL tokens to help run and secure the network. For a corporate treasury, in today's environment where traditional assets offer minimal yield, that 7% is exceptionally attractive.
Hugely attractive.
It offers a potent way to generate significant passive income on the assets they hold. It could lead to substantial capital appreciation over time, and it can even act as a robust hedge against traditional fiat inflation, far outpacing what you'd get from cash or low-yield bonds.
So it's active yield generation, not just hoping the price goes up.
Precisely. Active on-chain yield generation. It adds a whole new dimension to treasury returns. But, and this is crucial for any corporation, you have to consider the operational complexities.
Like custody.
Institution-grade custody, understanding lockup periods, the risk of slashing events where a validator messes up and loses funds. Sharps hiring Solana native leadership strongly suggests they're aware of these nuances.
That makes sense. Okay, so yield is one big factor. Next up, that incredibly impressive number, 65,000 transactions per second, or TPS. What does that really mean for Sharps?
That metric speaks directly to Solana's fundamental speed and scalability. It's hugely important for any robust digital infrastructure. The immense speed and scalability from 65,000 TPS aren't just technical bragging rights, they're critical for practical use. While Sharps might initially just be holding SOL.
As a treasury asset, yeah.
This high throughput means Solana can support an incredibly active, dynamic, and rapidly expanding ecosystem of apps and users. For a corporate treasury, this isn't just about current holdings. It could be vital for future applications.
Like integrating blockchain into their actual business down the line.
Potentially. Beyond just holding the asset, it signifies a truly robust, efficient network that isn't easily bottlenecked by congestion, which, as we know, plagues some other major blockchains. That resilience and capacity offer long-term stability for the underlying asset.
Got it. And for any large financial holding, liquidity is always key for a corporate treasury, isn't it? Solana apparently boasts $6 billion in daily trading volume.
Absolutely. Liquidity is non-negotiable for serious institutional players. That $6 billion in daily volume is a powerful indicator of deep market liquidity. Meaning a corporate treasury needs to be totally confident it can get in and out of positions, whether buying more SOL or selling some off, without significantly moving the market price against them. High liquidity ensures large transactions, like Sharp's initial $50 million buy, can happen smoothly, efficiently, minimizing slippage, guaranteeing price stability during big trades.
So they can actually move the money when they need to.
Exactly. It signifies a deep, mature market where assets can be managed with agility. That's fundamental for any treasury managing significant capital. Deep markets mean flexibility and better risk management.
Okay, another really powerful metric you mentioned that goes beyond just token price. $1.3 billion in app revenue generated within the Solana ecosystem. That sounds important.
It is vital because it represents a tangible, robust economic engine humming along. $1.3 billion in app revenue signals a vibrant, active, growing ecosystem with real-world utility and genuine adoption.
So it's not just speculation driving value.
Precisely. It tells us, critically, that Solana isn't just a speculative asset whose value comes only from market sentiment or hype. It's a foundational network powering numerous applications that are generating actual measurable revenue. That indicates a robust, active economy built on the blockchain. This translates to inherent self-sustaining value being created and captured within the ecosystem. That provides a much more stable, growing foundation for a corporate treasury asset compared to something purely speculative.
Real economic activity.
Tangible economic activity and value creation underpinning the asset itself. Yes.
And finally, the fact that Solana boasts millions of active wallets. What does that tell us?
Millions of active wallets really represent the powerful network effect in action. A large, engaged user base indicates strong adoption, widespread community support, and huge potential for sustained future growth and stability.
So strength in numbers.
Kind of. For a corporate treasury, it suggests a highly resilient network, one that's less susceptible to sudden, dramatic shifts in sentiment because it's bolstered by widespread participation and active use across many apps. It speaks directly to the long-term viability, the robustness, the overall health of the ecosystem. That provides confidence the asset is supported by growing utility and a real user base. So you put all these factors together, the attractive staking yields, the incredible speed and scalability, the immense liquidity, the significant app revenue, the vast user base that collectively makes Solana really stand out.
Yeah, paints a picture.
Not just against other blockchains, but even against traditional assets for corporate treasury management. It offers this unique blend of high growth potential, active yield generation, and operational robustness that traditional assets just can't match right now. It's a comprehensive value proposition.
And what's really interesting here for context is that Sharp's plan doesn't seem to be happening in a vacuum, right?
Yeah.
This big move aligns with a broader institutional appetite for Solana.
That's a key point. We've seen credible reports about, what was it, around $1 billion in potential Solana Treasury talks involving some really major players in crypto investment.
Like who?
Prominent names like Galaxy Digital, Jump Trading, Multicoin Capital. These aren't small retail players. This is the big leagues showing serious interest.
So connecting this to the bigger picture, what does that broader institutional interest signal?
It's an incredibly powerful signal to the market. It clearly says that leading investment firms, sophisticated crypto-native funds, perceive significant long-term value, stability, and growth potential in Solana. This collective institutional validation further solidifies Solana's position as a serious contender for corporate treasury diversification. It moves it beyond just purely speculative portfolios.
So Sharps is an outlier, maybe just an early mover.
Exactly. In this light, Sharps Technology looks less like an isolated outlier and more like an early, bold mover within what seems to be an emerging and powerful trend. And this trend, this growing institutional embrace, could very well legitimize Solana as a serious asset for corporate balance sheets on a much wider scale.
Creating a domino effect.
Potentially, yes. This validation could create a powerful domino effect where more companies across both traditional and emerging sectors start seriously considering Solana for their own capital management strategies. It actively shifts the perception from just another altcoin to a viable institutional-grade asset suitable for strategic financial deployment. That kind of broad institutional validation is absolutely crucial for wider market acceptance, building confidence, and driving the next wave of corporate adoption. It's like a stamp of approval that echoes through the financial world.
Okay, so let's zoom out a bit from Sharps specifically. What does this all really mean for the broader corporate world? Why does one medical device company's treasury strategy matter so much in the grand scheme?
It matters because this audacious move by Sharps signals a significant, undeniable rising trend. Small-cap firms are increasingly strategically leveraging crypto treasuries, and specifically Solana here, not as a pure gamble, but as a sophisticated, forward-thinking tool for robust capital management.
And this represents some fundamental shifts in how companies are approaching finance.
I think it represents several fundamental and pretty exciting shifts. Firstly, crypto is decisively emerging as a powerful diversification tool.
Oh.
It offers a brand new, potentially uncorrelated asset class for diversifying corporate holdings beyond the usual cash, bonds, or equities, all of which can be vulnerable to inflation, market swings, systemic risks. Crypto can offer genuinely different risk-reward profiles.
A valuable hedge, perhaps.
Potentially a valuable hedge, yes. Secondly, companies are strategically using crypto treasuries as potent new market signals.
How so? Signaling what?
By making such a bold public move, firms like Sharps are effectively signaling innovation, adaptability, a truly forward-thinking approach to investors. In an increasingly crowded market, this can be an incredibly effective way to attract a new demographic of investors, those looking for companies embracing cutting-edge tech, unafraid to disrupt financial norms. It's a powerful way to differentiate, grab attention, project a future-ready image.
Okay, diversification, signaling. What else?
And critically, this whole trend demonstrates a profound move beyond pure speculation. For an informed audience like you listening, it's clear. Traditional firms are exploring blockchain for strategic capital management, not just a quick profit play.
Right. It's not just buy low, sell high.
Exactly. It's not just buying crypto and hoping the price rockets. It's about thoughtfully integrating it into a comprehensive financial strategy, leveraging staking yields, ensuring liquidity, capitalizing on ecosystem growth, seeing digital assets as fundamental long-term components of a modern treasury, not just a side bet. This forces a reevaluation of established financial principles. What are the deeper implications for how companies define assets, manage risk, seek growth in this digital economy? It's reshaping corporate asset management.
That's a powerful framework. And what's really interesting is, while Sharps feels revolutionary, there are historical precedents, right? Parallels that help us understand this. MicroStrategy comes to mind immediately.
Absolutely. MicroStrategy under Michael Saylor provided the most obvious blueprint for this kind of corporate crypto pivot with their pioneering Bitcoin treasury strategy.
Can you remind us briefly what they did?
Sure. MicroStrategy deliberately turned itself into a proxy for Bitcoin adoption. They systematically used various financing methods, debt, equity offerings to accumulate massive amounts of Bitcoin. This effectively transformed their stock price, making it heavily correlated to Bitcoin's performance. Their stated goal was to offer investors straightforward exposure to Bitcoin through a public stock, bypassing the complexities of holding crypto directly, a regulated vehicle for Bitcoin investment.
Okay, so Sharps is echoing that strategy.
In many ways, yes, becoming a publicly traded proxy for a digital asset. However, they make that crucial, distinct pivot to Solana instead of Bitcoin.
Which raises that multi-layered question. What does this shift from Bitcoin to Solana signify?
Exactly. Is it about seeking potentially higher growth, given Solana's earlier stage and rapid expansion compared to mature Bitcoin? Is it about embracing a different risk profile, maybe higher volatility for potentially greater upside?
Or maybe diversifying the type of crypto held?
Or is it about intelligently diversifying the type of crypto asset held in corporate treasuries? Acknowledging different blockchains offer different value propositions, capabilities, growth vectors. This pivot suggests a more nuanced, sophisticated understanding of the crypto landscape is emerging in corporate finance, moving beyond just Bitcoin as the only institutional option.
Interesting. And it wasn't just MicroStrategy, right?
Yeah.
You mentioned Sharps isn't even the first in the healthcare sector to look at crypto treasuries.
That's absolutely right. This trend actually started with some forward-thinking biotech firms, although on a much, much smaller scale.
Who were they?
Firms like Hoth Therapeutics, they did an initial $1 million Bitcoin allocation. Atai Life Sciences established a $5 million Bitcoin treasury. They were among the very early adopters in healthcare.
But their motivation was different, wasn't it?
Often, yes. Their initial motivation was typically more conservative, more defensive. They primarily saw Bitcoin as a hedge against inflation, like digital gold, a store of value to protect their balance sheets against fiat currency erosion, especially during periods of monetary expansion. More about capital preservation.
So Sharps takes that concept but scales it way up and shifts the focus.
Exactly. What's truly significant here, highlighting the evolutionary leap, is the dramatic scaling up with Sharps. They expand the concept of a crypto treasury to Solana, but at a vastly larger scale. $400 million strategic move versus $15 million.
That's a huge difference.
It's orders of magnitude larger. And this progression from small-scale inflation hedges to multi-million-dollar strategic growth bets tells us a lot about the increasing confidence in crypto as a legitimate, powerful corporate asset. It's a clear evolution from defensive positioning to a much more offensive growth strategy. It shows a maturing understanding and accelerating acceptance of digital assets within the C-suite. Growing conviction these aren't just a fad, but becoming a long-term fixture in modern corporate finance. #5, implications and future outlook.
Okay, we've really peeled back the layers here on this fascinating, multifaceted story. Now it's time for some of the harder, more critical questions. So for you, the astute listener, let's consider this. Would you invest in a medical device company that just effectively became a major Solana treasury?
Yeah, the big question.
Is this a smart, visionary pivot in your eyes? Or is it potentially just chasing headlines for a short-term stock bump?
This is the absolutely critical question investors, analysts, board members will be grappling with. On one hand, there are genuinely significant potential rewards.
Like what?
The opportunity for substantial returns if Solana keeps growing and solidifies its position. There's the powerful perception of market innovation, signaling forward-thinking leadership, attracting new tech-savvy investors. Sharps could become that high-growth proxy for the Solana ecosystem, like MicroStrategy did for Bitcoin. A unique investment vehicle.
Okay, that's the bull case. What about the risks?
It's equally crucial to weigh the very real, significant risks. Crypto assets, even established ones like Solana, are inherently volatile, subject to rapid price swings.
We all know that.
There's considerable regulatory uncertainty, constantly evolving globally, which could impact the value, legality, usability of these treasuries. And there's operational risk managing. Such a novel, complex asset class at scale requires specialized expertise, robust security, sophisticated risk management. The ultimate success hinges on Sharps navigating these complexities and on Solana itself maintaining its growth, security, and stability. It's not a simple bet. It's a calculated, high-stakes strategic decision.
It really encourages us, and you, to think deeply about the long-term strategic alignment. Does this bold move genuinely enhance Sharps' core business, the medical devices, or its overall long-term financial health? Maybe through yield or hedging traditional risks? Or is it primarily a short-term play, ingeniously designed to grab attention, generate buzz, pump the stock without deep fundamental integration into the company's long-term vision? It's a crucial distinction: strategic shift versus clever speculation. And given the unprecedented nature of this for a company like Sharps, we have to wonder, could Solana Treasuries become the next Bitcoin Treasury strategy? Gold rush. Is Sharps just the first domino in a new wave, especially among small and mid-cap firms?
It's certainly a compelling, exciting possibility, but the path to a widespread Solana gold rush is probably more nuanced than just copy-pasting the Bitcoin trend.
What would need to happen?
For Solana treasuries to become truly widespread, several critical conditions likely need to mature: sustained stability, robust growth, increasing utility within the Solana ecosystem itself. Crucially, more regulatory clarity around corporate digital asset holdings globally, and perhaps most importantly, a demonstrable, undeniable track record of sustained success from early movers like Sharps. That provides the powerful validation needed for broader adoption. If Sharks does well over the next few years, it's an invaluable case study, a blueprint.
But there are hurdles too, right?
Significant challenges, absolutely. Market liquidity, while high for Solana, could face stress if too many large corporations tried massive buys at once. Regulatory landscapes vary wildly, creating compliance headaches. And as Sharps recognized by hiring leaders, the specialized internal expertise needed custody, accounting isn't something every company has. It's a big barrier to entry. So a gold rush is possible, but likely won't be without considerable hurdles.
Okay, that brings us to our final, really engaging question for you, our listener. What metrics or factors in Solana's ecosystem, maybe beyond what we've already discussed, would you personally prioritize and scrutinize? What would justify such a massive corporate crypto bet if your company was considering it?
Good thought exercise.
Yeah.
We've recapped the critical metrics Sharps likely considered: the 7% staking yield, the 65K TPS, the $60 daily volume, the 1.3B app revenue, the millions of active wallets. These are fundamental for assessing Solana as a treasury asset.
Right.
But I'd encourage you to think beyond just those numbers. What other, maybe qualitative or strategic factors would you weigh?
Like what?
Would it be the pace of developer activity? Innovation in the ecosystem, the growth of specific DeFi protocols needed for yield, the network security audit history, maybe the broader macro environment and Solana's brand perception in Web3. What specific elements would give you the ultimate confidence to put hundreds of millions of corporate money into a decentralized asset? It's a profoundly complex decision, demands deep due diligence, a forward-looking view, and a clear grasp of both traditional and digital asset risk. Hashtag tag outro.
Wow, what an incredible journey today. Almost unbelievable, really. From a medical device maker focused on syringe safety to a bold multi-million-dollar investor making a strategic bet on the cutting-edge Solana blockchain. We saw how Sharps used that 400 meet IP, got the $50 discounted SOL purchase, brought in native leadership, and nearly doubled its stock price overnight.
It's truly a testament to the rapidly evolving dynamic landscape of corporate finance.
It really is.
And this deep dive into Sharps' pivot, it profoundly challenges our traditional definitions of what a company is, what its strategic capabilities can be.
Right.
What does it truly mean now for a medical device company, when a significant chunk of its future value, its financial stability, maybe its strategic direction, might be tied to the performance and growth of a decentralized blockchain like Solana? It's a question hitting the core of corporate identity, value creation, risk management in our digitizing economy.
It's a question, truly, that could redefine corporate strategy for years, maybe decades to come. And if this deep dive into Sharp's audacious pivot to Solana got your wheels turning, if you learned something new, or if you found this story just as mind-blowing and significant as we did,
Hope you did.
maybe consider taking a moment to like this deep dive, subscribe to our channel, hit that notification bell. Your engagement, your comments, your support, it really helps us out tremendously. It boosts our visibility in the algorithm, helps us reach more curious, informed minds like yours.
Let's just keep doing this.
Exactly. It lets us keep decoding the wildest crypto moves with the context, clarity, and depth you expect from the deep dive. We truly appreciate it.